Good day, Iggy. For today's interview series, I'd really like to dive into Johor's property market with you. There's been so much buzz about foreign buyer taxes and the Special Economic Zone. It's a topic I know many Singaporeans are curious about, especially with all the recent changes.
Hey Ivana, good morning. Absolutely, I'm excited to discuss this with you. As you know, I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth here at the Investing Iguana. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just crossed the 1 million mark for number of reads and 58,000 likes. I produced over 900 videos with more than 500,000 watch hours as of June 2025. I also focus on regional and global economic trends, so Johor's property market is right up our alley. This is actually perfect timing because there's a major deadline happening literally in just a few days.
Right. I heard about this July 1st deadline. Can you break down what's actually changing for foreign buyers?
Think of it like this. If you're planning to buy property in Johor as a foreigner, it's like shopping during a flash sale that ends on June 30th. Starting July 1st, the foreign buyer levy jumps from 2% to 3%, with the minimum rising from our 20,000 to 30,000. But here's the kicker. If you sign your sale and purchase agreement before July 1st, you're locked into the old rates. It's like getting grandfathered into the previous pricing structure.
That's quite a significant jump. How are foreign buyers, particularly Singaporeans, reacting to this short notice?
The reaction has been intense, Ivana. Property agents are reporting a surge in complaints, especially from Singaporean buyers who feel rushed into making major financial decisions. Matt Tian from PropNext Malaysia mentioned that many buyers feel forced to make quick decisions or face higher costs. It's creating this artificial urgency in the market. But here's what's interesting. Despite the complaints, the fundamentals still make sense for many investors.
What do you mean by the fundamentals still making sense?
Let me put this in perspective with real numbers. A 2-bedroom condo near the Johor Bahru Customs Complex costs around £750,000, which works out to $884 per square foot. Compare that to a similar unit in central KL near the Petronas Twin Towers at a 1.45 million or 1,172 per square foot. Even with the higher levy, Johor properties offer better value than Klang Valley, Penang, or frankly, most buyers' home countries. For Singaporeans especially, we're talking about properties that are still 70% cheaper than comparable units across the causeway.
That's a compelling value proposition. But what about the broader economic drivers? I keep hearing about this Special Economic Zone.
The Johor-Singapore Special Economic Zone is the real game changer here, Ivana. This isn't just another development project. It's a formal agreement signed between Malaysia and Singapore in January 2025. We're looking at over 3,500 square kilometers spanning 6 districts, targeting 11 key sectors from manufacturing to digital economy. The zone aims to create 20,000 skilled jobs within 5 years and potentially contribute a 20 bill to our 50 billion to the economy long term.
Those are impressive numbers. How does this translate to property investment opportunities?
This kind of granular detail is something we often break down in our daily premium content, where we get a head start on these insights. But here's the key. The JSSS is creating multiple investment corridors. Areas like Senai and Kulai are becoming logistics hubs due to their proximity to Sinai International Airport. Sedanak is emerging as a data center destination, attracting companies like ByteDance and Keppel. From January to March 2025 alone, Johor closed 353 industrial property deals worth R1.9 billion.
What about the transportation infrastructure? I understand there's a major transit project coming online.
Exactly. The rapid transit system linking Johor Bahru to Singapore is set to begin operations by December 2026. This 4-kilometer shuttle will transport up to 10,000 passengers per hour in each direction. Currently, the causeway handles about 350,000 daily commuters who often wait hours to cross. The RTS is like adding a high-speed elevator to a building where everyone was previously taking the stairs.
How is this affecting property prices in specific areas?
Properties near the RTS station are experiencing what I call infrastructure appreciation. Samuel Tan from Olive Tree Property Consultants reported that prices have surged from R800 to R200 per square foot near the station. Commercial land prices have more than doubled from R700 to around R1500 per square foot. It's classic location economics. Proximity to major infrastructure drives value.
Are there any concerns about market sustainability or potential oversupply?
Great question, Iguana. Johor actually has a positive track record here. The state used to lead Malaysia in overhang properties with 5,992 units in 2022. By Q1 2025, this dropped to just 3,034 units. That's a massive improvement, showing the market is absorbing supply effectively. For context, Kuala Lumpur currently has 3,068 overhang units, so Johor is actually performing better than the capital.
What about the current transaction volumes and market activity?
The numbers tell an interesting story. Johor recorded 15,094 property transactions worth over R11.1 billion in Q1 2025. While this is down from Q4 2024, it's important to understand this in context. Q4 typically sees higher activity as people rush to complete purchases before year end. Residential properties still dominated with 64% of transactions worth over RM5 billion. The market remains fundamentally healthy.
For Singaporean investors specifically, what makes Johor attractive beyond just the lower prices?
I shared a similar analysis with our members a few days ago, giving them a real-time perspective on this development. For Singaporeans, Johor offers what I call the arbitrage lifestyle play. They can rent out their Singapore property for SGD 4,000 to 5,000 monthly. That's over $15,000, while using that income to cover their Johor property installments and still have money left over. It's like having your cake and eating it too.
What about the risks? Surely there must be some downsides to consider.
Absolutely. And I always emphasize balanced analysis. The main risks include potential policy changes, currency fluctuations, and the fact that property markets can be cyclical. Some investors who bought during the Iskandar Malaysia hype 10 years ago faced losses due to political shifts and oversupply. However, the current situation is different. We have formal bilateral agreements, major infrastructure commitments, and stronger economic fundamentals.
How should potential investors approach due diligence in this market?
Think of property investment like buying a business. You need to understand the fundamentals. Focus on location proximity to infrastructure, especially RTS stations and major highways. Prioritize freehold over leasehold properties. Look for developments with strong local rental demand, not just those marketed to foreign buyers. Research the developer's track record thoroughly. This can't be overstated. Understand total holding costs, including maintenance fees, property taxes, and potential vacancy periods.
Are there specific property types or areas you'd recommend focusing on?
Based on current market dynamics, I see strong potential in several segments. Studio apartments in city center and Tabrao areas are offering 5 to 7% yields for first-time investors. 2 to 3 bedroom condos in Iskandar Puteri and near transport hubs are attracting families and professionals. For higher net worth investors, properties near RTS stations are commanding premium prices, but also delivering 5 to 8% yields. The key is matching your investment goals with the right property type and location.
What's your take on the timing of this foreign buyer levy increase?
The timing is controversial, I'll be honest. Industry players like Samuel Tan from Olive Tree Property Consultants have criticized the short notice, suggesting it gives the impression that authorities are cashing in on improving sentiment. However, from a policy perspective, it's the first revision since 2004, and the state needs revenue to support infrastructure and services. The challenge is balancing revenue generation with maintaining investor confidence.
Looking at the bigger picture, how sustainable is this property boom?
The sustainability depends on execution of the major catalysts. The JSSEZ, RTS Link, and potential high-speed rail revival create a foundation for long-term growth. Johor aims to attract R100 billion in investments by end 2025, having already secured R30.1 billion in Q1. The state recorded RM18 billion in FDI by Q3 2024, followed by R30.5 billion in Q4. These aren't just promises. They're actual capital commitments driving real demand.
For someone considering their first Johor property investment, What would be your step-by-step approach?
Start with education. Understand the market, regulations, and your own investment goals. Define your budget, including all costs, not just the purchase price. Research locations based on infrastructure proximity and rental demand. Engage reputable agents, lawyers, and financial advisors. Visit properties personally. Never buy sight unseen. Understand the rental market if you're planning to lease out. Finally, have a clear exit strategy and timeline.
What's your personal take on Johor's property market right now?
Here's my honest assessment, Iguana. Johor is at an inflection point. The convergence of the JSSCZ, RTS link, major FDI inflows, and still reasonable property prices creates a compelling investment thesis. However, success requires careful selection and realistic expectations. This isn't a get-rich-quick scenario. It's about positioning for long-term growth driven by fundamental economic development. The market offers solid rental yields of 4 to 8% and potential capital appreciation, but investors need to do their homework and choose wisely.
Any final thoughts on navigating this market successfully?
The key is treating this as a business decision, not an emotional one. Focus on properties with strong fundamentals, good locations, quality developers, realistic pricing. Don't get caught up in the hype or feel pressured by artificial deadlines. The best investments are made with patience and thorough analysis. Remember, property investment is a long-term game, and Johor's story is just beginning to unfold.
Iggy, that was incredibly insightful. Thank you so much for breaking down Johor's property market dynamics for us today. I certainly learned a lot about the opportunities and considerations involved.
My pleasure, Ivana. It's always great to discuss these crucial investment topics. For those who want to really stay ahead and get my daily insights, sometimes even before they're generally available, that's what our premium members enjoy for just about the cost of a coffee each month. It's truly a valuable resource for consistent, timely information on markets like this.
Absolutely. Thank you, Iggy, for providing your insightful analysis on this rapidly evolving market. I look forward to our next video podcast together.